Welcome to Making Every Dollar Count: Practical Tips for Cost Cutting and Budget Management. Brought to you by Decimal with participation from Tam from Ramp, Logan from Forecastr, and Ashley from LiftBridge. As we start today, we wanted to talk about financial operations and strategic finance and how businesses can think about cost cutting and budget management. And I think, to me, as we've talked to our customers and businesses in general, in today's economy, this is, I think, the primary topic on everybody's mind is: how do I cut costs? How do I survive? How do I make it through? And how do I do it as well as I can? And we have a great guest list today of people who all have strategic experience working in businesses as well as helping them. So before we get started and kind of talk about cost cutting and budget management, I would like to introduce the people joining me today, starting with Tam. Can you tell us a little bit about yourself and Ramp?
Yeah, thanks, Matt. Appreciate you having us on here today. Super excited to be here. My name is Tam, based out of the Seattle area, and I do, as Matt has mentioned, have some experience in the accounting space, working specifically in real estate. I started my own practice, did that for about a year, and I've been in fintech ever since. And so learned a lot about how you can use and leverage technology and tools to automate some of these really manual processes that you're having to deal with, and also find ways to save on things that are really hard to identify. A little bit about Ramp. So Ramp itself consolidates your typical finance tech stack. So you might have a few disparate systems that you're utilizing. We want to consolidate that into one system, make it easy for you to learn and to use. Focus on the card spend, bill pay, reimbursements, and also procurement as well. And our system is hyper-focused on saving our customers ultimately time and money at the end of the day. So thanks for having me on.
Well, thanks for joining us. And next we have Logan from Forecastr.
Yeah, thanks so much, Matt. It's a pleasure to be here. And yeah, really looking forward to chatting about this. It's definitely top of mind for a lot of folks. So I'm Logan, co-founder, chief operating officer over at Forecastr. My background is in FP&A, so specifically for startups. So really kind of seed stage up into Series B stage startups. I was a fractional CFO for a number of years, and I built a lot of financial models and spent a lot of time in Excel. And I noticed kind of a lot of the issues whenever it came to trying to project cash flows out in the future, specifically around Excel, which is what led me to starting Forecastr. So Forecastr is essentially an online replacement to Excel when it comes to budgeting and financial modeling. So, we're business agnostic. We work with a lot of different companies. We have over 600 clients using us right now. And we ourselves are a startup, venture funded, and we are thinking of managing runway and managing spend as much as anybody else. But that's really where we shine, is helping you understand what your revenue is going to be out into the future, helping you understand what you're spending money on so that you can appropriately make these types of decisions, try to extend runway and manage cash. So really excited to be here, excited to jump into the conversation and share some of my experience.
Well, we appreciate you being here. And last but never least, Ashley.
Thanks, Matt. Thanks for having me. So my name is Ashley Vukovits, and my experience, so I'm a CPA. My experience is all in the accounting and finance companies. During my tenure last couple of years as a CFO of a public company that went through a pretty large sale. And then in June of 20, I formed LiftBridge CXO with a couple of other former CFOs. So we provide fractional CFO services to small and medium-sized companies, a lot in the technology industry, but other industries as well. And just so excited to be here. This topic is certainly top of mind at all of our clients. So have these conversations almost daily. So looking forward to sharing ideas and thoughts with everyone.
So Ashley, as we were kind of preparing for this webinar and having these conversations, you mentioned what you just did. You are getting asked about cost cutting and budget management a lot. Before we dive into kind of tactics, let's let's outline what exactly we mean. When people ask you about cost cutting and budget management, kind of talk about some of the key terms and concepts and what that means to you.
Yeah, well, I think the companies we deal with are smaller in nature, and so they're always looking to, where their interests lie, which could be board of directors, could be investors. And so in the past, there's been a lot of focus on revenue growth, driving the valuations of the companies. And certainly in the last year plus, a lot of that has turned to cost cutting and trying to get to cash flow break even. So really just trying to figure out, how do you extend your cash runway so you're not having to go out and get debt or equity to fund the business, but really trying to make it self-sustaining. And so really that's what a lot of the smaller to medium-sized companies are trying to do today, which is extend the runway. And that we're going to talk about a lot of those cost cutting measures today, but that can be anything from people to different costs that we incur in the businesses.
Yeah, I think that makes a lot of sense. And, when we talk to companies all the time, we talk about how to run your business on a day-to-day basis, you need both financial operations, the ability to pay your bills, get paid, and track it all. And then you need the strategic side, and you need somebody to help you and set that ongoing future-facing look. Logan, I know that a lot of what you guys focus on is giving people that ongoing viewpoint, and not just a point in time, hey, here's what you can do today and move on, but really trying to establish that ability to create habits around it. What are you guys seeing today in terms of this that maybe even has changed since the pandemic and the years before, where cash was, everybody had cash?
Yeah, it's been a pretty major shift, and I'll touch on a little bit of what Ashley talked about, which is that, ordinarily, if you're running short on cash or something like that, the default was to go out and raise more money. If you're a venture-backed company, I mean, you're kind of on that hamster wheel of raising, burning, trying to get to that next milestone, and then just growing the company, and over time, potentially either becoming profitable or being acquired. So what we're finding right now is we are in an incredibly challenging market for fundraising, right? Like, I've been told by several people that they believe that this is the worst fundraising environment since the early 2000s. And I was too young at that point to validate or invalidate that. But what I can tell you with complete certainty is that it is very, very challenging out there. Forecastr is actually in the middle of raising a round right now. We're one of the lucky ones that are seeing some success in doing so, but a lot of our clients aren't. So whenever you find yourself in a situation like this, where if you are making plans for your company, maybe back at the end of 2022, early 2023, times have changed. The tides are turning a bit. So those companies that are going out and they were originally planning on raising 10, 15, $20 million, now they're going to have to tamper that back significantly. But that cash, that runway has got to come from somewhere, right? If you can't execute on a round, or perhaps you're going to overly dilute yourself because the markets are so challenged, really your only other lever, if you can't just magically grow revenue, is cutting costs, right? So, one of the things that you touched on, Matt, was just creating a really good cadence around looking at finance, paying attention to finance. Now, a lot of that is where accounting is so important. And this is why Decimal is, somebody that we recommend people use all the time. Is it's really important to understand where you are today, and getting an understanding of how much money you're burning, how much money you're making, things like that. But in challenging and turbulent markets like this, it's very important as well to understand where you're going. And, if you cut certain costs, what downstream impacts does that have into your business? So we talk about things a lot because we work with startups in terms of runway. So just making sure what we're coaching folks in, either if you have a path to profitability, try to get there. And that's going to be done largely, I think, in this market through cost management. If you really don't have a path to profitability, your best bet is to, again, use cost management to try to extend your runway as far as you possibly can. And we're all going to really hope that you can extend it far enough out to where by the time you come out the other end of this, you're going to be able to raise money. You're going to be able to kind of make it through. But that's kind of the frame that we're seeing people think about this through.
Well, Logan, I really appreciate you making me feel old with the early 2000s reference. But I think you bring up some good points. And, one thing that stood out to me that you were saying is what we talk about a lot is in order for your budgeting, in order to look forward, you need good data in. And the key to having good data in is to have the right tools and processes in place to make that easy to do, or at least easier to do. And Tam, that's where Ramp and a lot of the really great technology on the market today really excels at is that tooling. Will you talk about some of the things that you all see at Ramp or that you see in general with your experience in the market related to how important it is to put the right pieces in place so that you can actually do the go forward look?
Yeah, that's a really great question there. And I think it all really starts with, because there's so many options out there. There's a ton of different softwares and systems that you can choose. Make sure that you don't have systems that don't talk to each other. That just causes, more learning, more change management. Everyone has to, know where to go at what times. And so having a consolidated solution like Ramp is something that can really help optimize and streamline your processes. But also modern technology these days, you can leverage it really to automate any and all of the highly manual processes, data collection, receipt management and collection. It's so important to be able to apply rules, for example, on credit cards that are typically you don't have any control over how your employees are spending on the cards. You don't have any oversight and visibility into how they're spending on those cards. And so with modern solutions like Ramp, for example, you have the ability to control whether or not the expenses are able to go through in the first place, right? So I think control, and I think we're going to be able to touch on this a little bit later as well, but controlling expenses upfront as opposed to on the back end is going to save not only your employees a lot of time from having to manually figure out where to categorize expenses, for example. The chart of accounts, that's the foundation of an accounting system. It's really important and very crucial that you're working with an experienced firm like Decimal to get that set up, because that's the building block for all the other systems you're building into. And if you have a bloated and overcomplicated chart of accounts, for example, it's going to make it very hard for your employees to know where to categorize their expenses. And so starting there and then building up selecting tools that allow you to automatically code to expenses is going to help streamline that process.
And yeah, Matt, I was just going to add, if we come into a new client and they have Ramp or they have Forecastr, we're high-fiving each other, because we know that, like you said, the data coming in, or in Matt's case, like the projections going out, like it's all they're light years ahead of clients where we go in. It's all either Excel based or it's Google based, and the chart of accounts is a mess. And so a lot of times the first thing we have to do is help clean up the data, because like you said, Tam, if the data is not clean, it's not going to the proper chart of accounts, the data you're looking at is meaningless. Like, you have to have good data before you start analyzing where you're spending money and where you might be able to cut costs. So I just think it's really important to make, like you said, to make sure that the data coming in is accurate and it's in buckets that we can look at and easily discuss with department heads where they're spending money and where they might be able to make some cuts.
And I'll triple tap that as well. I mean, like the reality of it is accounting. So what Decimal does is the past of finance, and then we really are the future of finance. So kind of like looking at what's going to happen. And actually, I think that's the world that we both live in a lot. And you're kind of in both worlds as kind of the more strategic person on the call. But it's really, really challenging to forecast whenever you don't have ultimate clarity on what you've been doing. So the first place that we look, whenever we look at what are your expenses going to be out into the future, if they're bucketed correctly, the first thing we do is we look at what have you been spending money on? What has it been in the past? And then using that to project going forward, just to get a good understanding. So if your data is not clear and if you don't have understanding, I mean, I think that's step one whenever you're looking to control costs, is understand what are your costs and get really, really good visibility, really, really get clear there. And then once you've got that down, then there's a lot that you can do after that. But it's all going to start with making sure that your data is in a good spot.
Something that everybody seems to be hitting on is it's not just the right tools in place, it's the right processes to go with those tools and the right kind of infrastructure, so we've all been tap dancing around this subject, but I think let's just hit it. When business owners do this themselves, and I've done it myself, how fun is that to deal with? Because I don't know about you guys, but I've rarely seen an entrepreneur, whether it's in tech or non-tech, that they enjoy this aspect of the business. But those people that take the time, at least at the beginning, to understand where they're going, what to set up, what habits and processes to put around it, those are the ones that can set themselves up for success into the future.
Yeah, it's good. So I'll kind of like touch on that. One of the things that I found specific whenever it comes to finance is that a lot of times founders don't know what they don't know, right? So they understand that they need to be paying attention to these things, but they don't even understand where the potholes are. There are things that they have a feeling that they need to be paying attention to. They have things that they have a feeling that are very important to the business, but it is so far away from their core competency that they're forced to either try to tackle it themselves, which is unpleasant, and they probably don't do a good job, for it. They may come out stronger on the other end, but it's one of those things that I think that there's a reason that people try to get accounting off of their plate as quickly as possible, because they recognize that it's not fun, so they don't enjoy doing it, and they also recognize that they're not great at it. So it's something that they try to get off their plate. And then it's kind of the same thing with just financial operations in general, whenever they start to look at forecasting and things like that. I think it's very important that founders kind of come to that moment and understand that this is something that is very, very important and something that they need to pay attention to, whether it's them paying attention to it or whether it's somebody else. Of course, we recommend that they take it off of their plate because it's something that I think is best done by a specialist. But I think that that's just like one thing that we've come to understand, especially in this market, is founders a lot of times they kind of come to that moment where they're like, I really need to pay attention to this, but it's not their core competency, so it's best handled by other folks.
I think really well said there, Logan. It's really just, should I outsource my accounting function, or is it worth the investment and time to learn how to do this myself? And am I going to be able to do it at a level that I'm confident in? And am I going to be able to submit my books to my accountant or my CPA and then know that I'm not spending a ton of money to have them fix up my mistakes? Also, am I taking advantage of all the tax deductible items? Am I, working with a professional to, build a tax strategy that actually saves me money over time? I think that's one of the biggest things that accounting firms can do for their clients is advice. Get their books done throughout the year so that it's not a rat race at the end of the year, trying to collect all the documentation that keeps you in compliance and out of trouble. And I'm sure Ashley can speak to this as well.
Well, yeah, you guys did a great job. The only thing I was going to add is, sometimes we get in there and it's the founder, and sometimes they'll have a bookkeeper. I mean, we love it when they have decimal, but they end up spending so much time on this. And, we always tell them that's not where you should be spending your time. Like, you should be driving product development. You should definitely be driving sales, your marketing plans. I mean, there's so many other strategic things that they should be doing. And the earlier they can realize that and get good systems and people in place, just the more, the more they can not focus on it and really drive the things in the business that they should be focusing on.
Yeah. And I think I 100% agree with that, Ashley. And I'll add one more thing, which I know the center of today's conversation is around cutting costs. But just to give another kind of tangible example of founders that maybe don't even know what they don't know and why, experts need to be in the room, is that I heard this stat that I think it was like 95 or maybe it was even 99% of founders are not adhering to the reporting requirements that they have set by their operating agreement or term sheets that they get, which means that if I'm not giving my investors transparent data into the underlying health of my business, into the finances of the business, if push comes to shove and you get into a very gnarly situation, you can be sued, and that could really blow things up for you. And it's just one of those areas that unless you have somebody that lives and breathes this, you're probably never going to uncover that until it's too late. And that's just one specific example. There's numerous others that we could give, but it just shows that, you know, this cost cutting is very, very important in today's climate, but in really all climates, I think it's really, really important just to nail the fundamentals and just make sure that you've got a good handle just around the basic operations, specifically when it comes to finance.
So as we get into and talk about very tangible examples of cost cutting, you know, I think we can all agree that the major basis behind cost cutting is efficiency, and that can be efficiency of dollar, and that can be efficiency of time. And one of the things that I think is exceptionally important from the foundation up is putting the right tools in place to limit manual work, to create efficiency of time. And Tam, I'm interested because one of the things that I know that Ramp does really, really well, it can with the right implementation and the right people helping implement it, is it can really cut down on manual processes and very painful things. Talk about some of and this can be in some of your previous careers as well as today, some of the manual processes that you think are low-hanging fruit for business owners, for co-founders, for CEOs in general, that can lead to cost-cutting, kind of very tactical opportunities.
I think, you know, the accounting industry and just accounting functions and processes in general they've come a long way, but there's still so much more to be done in terms of, you know, coding the transactions, the accounting work, collecting receipts. I know that in terms of spend management, and I feel like now spend management itself is having more of a moment. People are starting to notice because of the economic environment that we're sitting in today. We got to save more money. It's harder to earn an extra dollar of revenue than it is to find somewhere to actually cut expense. And that doesn't mean cut everything. It just means, how can we get more visibility into what we're spending in the business? How can we control that spend? Simple things like uncovering where you might have duplicate subscriptions within your business or redundant subscriptions. Let's say, for example, you have QuickBooks, and then you've upgraded your accounting system to a NetSuite or Sage Intacct, and yet you forgot to cancel your QuickBooks subscription. We see that happen so often, and so having a tool that surfaces that says, hey, you're actually spending on these two items. Here are the cards that you're spending them on, and here's how much you're losing on a monthly basis because of that. That's pretty incredible, because these are things that are very, very manual for you as a business owner. You shouldn't be spending your time going through your accounting, your books to find these items. And especially as you scale, have more people, more departments, it's going to be impossible to do. And it's really just not time well spent. You should be spending your time elsewhere. So that's one example. Another is just automating the actual process of the accounting. So building in accounting rules to the cards that you're issuing your employees, removing the burden from them to have to actually code those transactions themselves. Because number one, do they know where to code those transactions? 9 times out of 10, probably not. They're going to code it's the wrong transaction. And then who's cleaning that up? It's going to be the accounting firm, right? And so we're just removing those kind of low value added items and all this time that really doesn't do anything for anybody, and then moving and shifting that to something that's more value added.
So growing up, my dad had a small business, and every year he would show up in February to his accounting firm with a box full of receipts. I'm taking it that's a bad idea.
Yes, absolutely. And I think there's so many ways now to collect receipts, and you don't have to have the box of receipts, entering that in manually. I think my very first job in accounting was actually in accounts payable, and that's how I had to do the invoices. I would get a stack of invoices, literally this big, take them home, probably shouldn't disclose that, but enter in all the information into the AP system. And it would take me hours to do that. And so adopting an AP solution that allows you to go ahead and OCR all that information off those bills. In Ramp's case, you can text your receipt back to the system. It automatically matches that against the transaction. You're not having to wait until the end of the month to match those transactions and receipts together. Especially as an employee, sometimes you can lose those receipts and then you're eating the cost yourself. And so we want to be able to make sure that everyone is benefiting from the front end, the end user, the cardholder, the employee, all the way to the back end, the accountants reviewing the transactions, knowing that the transactions have been coded properly and speeding up the month-end close process, just making it such a seamless flow. So at year end, you're not scrambling, trying to get everything together for taxes.
I was just going to say, after hearing about that stack of invoices, I now know why you're in fintech.
Yes, absolutely.
I was just gonna say, yeah, expense reporting is definitely something we see that's manual at a lot of smaller companies. And so, and you know, Tam talked about like all the benefits of automating that process, with which I agree to, but like going back to the cost cutting, it's also like having those properly coded and identified is also good as you're looking for costs you can cut, because I mean, we've seen it where, you know, there's just one credit card that everything goes on. And so trying to evaluate then, are there costs there that we can cut, that, you know, we can kind of tighten our belts a little bit? You know, we're in a time where that's necessary. So do we need to be spending, you know, $500 on a bottle of wine or whatever it is? So not only is it just good business practice to have those processes automated and cut down on the risk of human error, it's also important in this process that we're all going through of evaluating costs and seeing where we might be able to tighten things up.
Yeah, I totally agree with that as well. And I'll say, like, there's a lot of just like little low-hanging fruit things like that you can do. And like Tam and Ashley, I think that you all gave like a really good overview of that. And you know, I think a lot of the things that we work on are things that can kind of like help you get more out of it. I do think whenever you holistically get the picture of your financials together, one of the things that I've noticed, and it's kind of an unfortunate truth whenever it comes to having to do cost cutting, is I think what everybody will find is that the vast majority of their expenses are their people. So you're going to look at it, and typically it's over 80% if you're looking at especially for startups, because typically you're raising money to hire people to build product. So whenever you're looking at, you know, what are the main levers that I have in order to extend runway, there's all kinds of, you know, quick wins that you can get. And absolutely, you need to go through and you need to make sure that you squeeze as much out of that orange as you possibly can and don't waste money in a market like this. But I think that that'll get you, you know, so far, the biggest impact is going to be coming from looking at headcount and just seeing what happens. You know, if you make some trims if you need to. So one of the things that we like to do, we encourage clients to do, especially whenever they're kind of coming up on runway and they have to make tough decisions, is go down your payroll census, go down your roster and categorize people as absolutely critical, business will fail if they leave, versus would really be painful to leave, versus maybe kind of newish, it wouldn't be a huge pain, like not quite ramped up yet. So I think that you can kind of mentally put people in these buckets and then run through that exercise of, if we were to make cuts and we were to, you know, lose some folks that are kind of in that last bucket, what would that do to my runway, right? Like how much more time could I get? At what point do I get to profitability when doing that? And that's where I think financial modeling really comes in handy. And I'll kind of like call on this notion that, you know, there's a difference between growth and scale, where especially for VC-backed companies, growth is more with more. So I can just keep raising money and then throwing those dollars at the business and getting more customers and growing revenue, and I'll continue to burn money in so doing, right? And you will grow in doing that. And if you're just trying to grow the value of your company, then that's a good approach to doing that, because, you know, startups are traditionally valued off revenue. So if you can grow revenue, that's great. But then there's this notion of scale, which is doing more with less, or at least more with the same amount. And I think that in these challenging markets, that's really what you have to look at, is just, how do I continue to grow? How do I continue to like meet the expectations that I have for my company? knowing that in these days, costs are going to be very, very constrained. So every dollar that I spend, it has to be very, very well thought out. And that's really just, I think it's not a fun exercise to do because we all love our teams. But the reality of the situation is that is a lot of where our costs are.
No, I think that's very true. And one of the things that you hit on that I think is a very important next topic is when you look at cost cutting, there are two aspects of that. The first time that you do it, there is the what can I do today, and what can I do looking backwards to help me with today? That kind of one-time project-based scenario. And then there's the, all right, now that we've established the right processes and we've understood that good data in equals good data out, how do we put that ongoing process in place for continual planning and tracking? How do we create a plan? How do we create scenarios for plans that we can help make sure that, number one, we are continuing to exist well, and how do we scenario map out contingencies? Ashley, I know a lot of what you talk to your clients about is helping establish that. And I know, Logan, a lot of what your product really helps with is making sure that there is that model that they can point to. So Ashley, can you talk about some of the strategic sides, and then Logan, some of the needs to have that right model and kind of North Star as well?
Yeah, so I think that everybody's hitting on the importance and where we, I think we'll get a little bit into the tactical side of like what are some suggestions of where you can cut, and Logan's talked about that. But yeah, being able to look at models that tell you what your costs are going to do. So for example, like we've talked about, how do you outsource your accounting? How do you outsource, or how do you bring a system in that automates a lot of your back end bill processing, expense reporting, and then, bringing in software that can do the modeling for you. But you really need to step back and say, what's my accounting and finance department and all the processes and systems look like as a whole? And you can save money by bringing systems in if you do it properly. But you do need people, managing the systems, analyzing the data when it comes out, having controls in place. So it's kind of stepping back and saying, what's my overall big picture of my accounting and finance department? How can I put systems in place to help improve accuracy of data and help optimize the costs of that whole area? And so I think that's one important aspect. And then just having a process or system, both process and system is in place to be able to run scenarios to tell you, as I do these things, what is the outcome going to get me? Because the last thing you want to do, especially if you're in cost cutting mode, is, let's say you decide you're going to bring a bunch of consultants in to replace, functions that were done by employees, but you end up spending more money on the consultants than you do the employees, and maybe, certainly adding some systems and automating some processes in there as well. So it's just really important that as you're going through these cost-cutting processes and thinking about it both today, like Matt said, and looking in the future, that you're able to run scenarios to tell you what impact that's truly going to have on your financials. And I'm sure, Logan, you have some thoughts on how to run those scenarios and the systems involved in doing that.
No, absolutely. I think that's a really great way to tee that up, Ashley. And I'll note that really the way that we like to think about it as kind of like a holistic kind of finance function is, once you get your data right, which you've talked about, you get everything set up. What you really need to do is put together a budget that gives you some clarity around when your fume date is, if you're, or when you're going to hit profitability. But you have this framework of, this is what we're planning on spending money on within a given month, and then have that be something that is communicated throughout the entire team. Now, a plan is only valuable if it's a plan that is measured against and adhered to. So just one thing that we always recommend for all of our clients is have a dedicated monthly finance meeting with your team. And this is where it's really great to have strategic folks in the room. So Ashley, LiftBridge would be, if a company were using you all, it'd be great to have you all involved as well, just so that if they have questions or anything like that, they can get a good understanding. But if I have a budget in place and then I'm just blindly spending money, I don't know if I'm going over budget. I don't know if I'm going under budget. I don't know if I'm way off on what I forecasted my cash to be. So you need to make sure that you get a decent understanding of what the future is going to be, and then you manage towards that. So monthly finance meetings are a great way to do that. But the other thing that I recommend is giving yourself we talked about scenarios. So what we recommend is creating another scenario of your financial model, another scenario of your budget, if you will, where it is like one of the worst possible scenarios that you can imagine, right? Where your revenue is not growing, your expenses kind of are what they are, and just getting an understanding of what that could look like. And then just way out in advance, have a game plan for what you're going to do in that scenario. And in your monthly finance meeting, that's one of the things you need to talk about. Are we trending in this bad scenario, or are we trending in this good scenario? If we're trending in this bad scenario, let's start talking about this game plan that we talked about back here. That's probably going to be layoffs, unfortunately, right? I mean, that could be, or perhaps it's getting in debt, right? Or something like that. But I think it's really important, especially if you're an unprofitable company that has an end date, right? You have a fume date, to just really get ultimate clarity around when that's going to be, and then tracking towards it. And if it's understood, and if you're on track and you have a plan, then it may not be a problem. But if you're way off base and you're not paying attention to it, one of the worst things you can do is look up one day and realize you've got 2 months of runway left, right? That happens all the time. And it's an unforced error. So that's the biggest recommendation. If the only thing you get from this conversation is just pay attention in markets like these, in a very clear way, that's the best advice that I can give.
And then I just kind of wanted actually to touch on, Ashley, you mentioned, the importance of systems, setting up your systems properly, using the right tools as well. I think one of the things, especially as a company, you're starting out, it's so overwhelming because there's so many different things out there. So, make sure that you're doing your due diligence, figuring out, which softwares would be good for you to adopt, because the implementation process, the change management process, it's very time consuming. It's a huge investment of time. So you want to make sure you're selecting the right systems from the start. Can that system grow with you as you scale, as you bring on more employees? What is going to be cost down the road when you have 100 users as opposed to 50? So understanding whether or not systems can grow with you, because you're going to have things for CRM, sales, finance and accounting, bill pay. So it's very, very easy to start accumulating all these different tools that you're using, and then to have to cut them and then move from one system to another. Again, you're going through that change management process. So something to be very mindful of. Another is, in the vein of cost cutting, how much are you paying compared to other similar businesses who are using the same software? You go to a software vendor's website and you say, hey, reach out to us for enterprise pricing. And then you talk to them, they send you a price, and you have really no idea how much you're paying, whether you're overpaying, you're paying on average, or you're getting a good deal. And so outsourcing kind of that element of procurement to a company or software or a tool that knows how to do that well and can cross-reference, the contracts that you're getting with these softwares against thousands of other businesses in the same area is going to be so huge. And I think I'm excited because this is a very timely moment for us, because we just released an announcement around leveraging AI for our contract and vendor management piece in Ramp. And so if you do upload your contract, you're able to see, are you overpaying for something? How much could you be negotiating down with this particular vendor? And so this is a very easy way to go ahead and leverage the data that you already have access to actually negotiate down prices on contracts.
When I think one of the things that, number one, that is an awesome update. Number two is, I think you've hit on two topics that I think are really important when thinking about cost cutting and in even initial setup, number one is the democratization of information. The ability to go out and find better information is becoming easier and easier. And taking the time to go out and actually seek out that information is important. The other thing is as we talk about, we have a lot of great advisors and a lot of great software and a lot of great tools represented here today. One of the things that we run into, and I'm sure you guys do too, is seeking out the right advice from the right people. I was talking to a business the other day and they were asking why their accounting, their financial operations system was so off. And I said, well, who advised you on setting it up? And they said, my lawyer. And I said, well, I went to law school. I can tell you that was a terrible idea. And it's one of the things that Decimal talks a lot about is the difference between people that have run businesses and people that have only advised businesses. And as you kind of talk about and think about where to seek the right types of advice, there's also that democratization of information has also created a lot of noise. How would you all look at, let's get tactical on seeking out advice for help? As we already said, entrepreneurs, this is not their core competency, accounting. Where do you tend to find is a good place to find advice related to cost cutting, setting up, picking the right tools, anything along those lines that we're kind of hitting today?
Well, I think, I mean, I guess I'll just plug LiftBridge a little bit, but firms like us, getting a good strategic finance advice in there, whether it's time to hire your own CFO or you just feel like, a lot of times when we go into a company and they say, oh, I have a bookkeeper and I have a tax accountant. And I'm like, well, great, because we don't do either of those things. So so finding when it's the time to bring those advisors in, and then, we see a lot of different things at our clients, whether it's processes that aren't working, it's back office accounting that's bad, or it's bad spreadsheets. I mean, we see it all, and we see a lot of vendors too. And we have, we have our own internal list of those that our clients have been successful with, and maybe those that haven't been successful with. So I think bringing in that strategic level of finance when it's the right time, and early is good. The longer you wait, just the more messy it gets. So bringing in strategic finance early to be able to help you understand where you have improvements you can make, and then where those whether it's individual or companies have seen success with other companies, either with systems or what processes or people.
Yeah, I'll double tap on that. I mean, I think that's really where fractional CFOs, if you're like a startup, that's where really startup CFOs shine. So like LiftBridge would be a great resource there. I mean, I think fractional CFOs really shine whenever there's points of friction in the business, and that could be good friction or bad friction. If everything's going great and all your systems are set up and everything's amazing, really all a fractional CFO has to do is just like give you a quick variance report and then maybe give you some tips. But that's really not why you're paying them. You're paying them for all of the strategy. You're paying them to really help you get to that point. So whenever you're in turbulent markets that require cost cutting, whenever you need to negotiate, debt, whenever you're making your way through a transaction, right? Like all of these things, these are all where, fractional CFOs can jump in and really help you think critically about this type of stuff. So that would be my number one, is just like find somebody that this is what they do, this is the world they live, and they work with a multitude of clients that are facing the same challenges that you're facing, and they're able to navigate them onto success. So that would be my first one. But then my second one would be assigning responsibility. And this is, I think, where like Ramp would really come in well, where you can set a budget by department, and you could see what that budget, if that budget were to play out and you were to adhere to that budget, you can forecast what your cash is going to be. So now it's your job to stick to that budget. So, you can put that on to the owners of those departments and say, look, this is what you need to spend. This is the amount that we're approving. If you can stick to this, great. And this is where we're going to be. Now it is up to you to find out how to make the most out of this budget. And I think if you assign responsibility to it and you give them their constraints and you say, we need to hit these targets and this is the budget you got, and it's completely up to you and how we optimize that, I think that you're going to see a lot of efficiencies gained from that as well.
Yeah, that's huge. I mean, I've worked with so many accounting firms across the last, 5 years or so that I've been in this industry. And, folks like Ashley and LiftBridge, they've seen it all. They worked with clients and businesses just like you. They know what works, what processes, what tools, what systems it's not a one size fits all. And so I think you really got to leverage these experts to help guide you, to advise you. And the way that the accounting industry has evolved over time is that it's really not about compliance anymore. It's not just about keeping you out of jail. It's way more than that. We're leaning into the advisory aspect and want to be able to help you determine, can you hire another employee? What's your next step? And tools like Forecastr are all built around kind of that premise as well, right? How can we help even, the accountants better leverage the data, visualize that data to also inform the decisions that you're making as a business as well. So super important. Yeah, that's kind of my thought on that.
One of the big changes that I've noticed over the last decade or so being in the, kind of small business tech world is that on the operational side of things, it has become as much of a technology job as it has become an accounting role. And I think that, so as we start to wrap up, and I'd love to get everybody's kind of final thoughts. One of the things that stands out to me is when you put technology put together well first, the efficiencies that creates gives you the opportunity to save on costs so that you can spend where it's most strategic to help you grow and survive. But as we kind of wrap up and as we think about where things are and where things are going or could be going as a general economy, I think this topic is going to be very top of mind for people for probably quite a while. I would love to get final thoughts, and we'll start with Tam, then Logan, and then Ashley. As businesses are thinking of cost cutting and budgeting, what are some of your final thoughts that can help them take the next steps in thinking about the best ways to go about it?
What haven't we already covered today? I think there's been a lot of great conversations so far about, the use of tools, systems, forecasting for the future. You always got to have a plan in place and budget and be able to stick to it. Otherwise, you can't really compare how you're performing against how you are anticipating. Maintaining runway is so important, of course. I think for me personally, it's about placing more controls, but still allowing the flexibility and agility for your business to operate without, exposing yourself to unnecessary risk, to fraud, I think with tools like Ramp, being able to put controls on the cards up front to prevent spend before it even happens. So anything that is out of policy, you're able to capture up front, those transactions get automatically declined. Being able to see, again, duplicate spending and SaaS subscriptions, being able to issue cards and, access reimbursements and things like that at scale. So just from a tools perspective, finding something that really works for you, and a software vendor that can also be a partner in your business, because we're not just a tool that you can leverage. We are also a strategic partner in many cases. So finding the right partner is crucial. And that goes not only for software, but also for your accountant that you decide to outsource to, if that's a method that you're using.
Yeah, I'll jump in here and give kind of my final thoughts. So I think my final thoughts are kind of marrying up two things that I've just been talking about, which is that, the financial operations becoming a, kind of software oriented job. And, we already talked about how for most of us, the vast majority of our expenses are our people, right? So one of the thought exercises I think is really important to go through is just audit your team and just really critically think through, are there things that are being done by humans that could be done by software, or perhaps that should be done by software? I think that if you really think critically and you go down and you spend the time, I think that you will find that there is a lot of gains to be made, because ultimately that's why software is there. Anything can be done by hand, right? Like anybody can go and hire people to do any task. The purpose of software is so that that's not, you don't have to do that. And it's significantly cheaper. It's going to save you a lot of time. So just think critically, figure out if there's anything there. And if there's not, the next step before, making any major moves is figuring out, should you outsource, right? Like if you have an in-house accounting team, perhaps you can outsource. Maybe your quality will not suffer. Perhaps it may even get better, right? Something like that. So just like really think through and just understand, like, do I need dedicated full-time people to do certain tasks? And can I get efficiency gains by using a software or outsourcing? I think that's where you're going to get the most, I think, bang for your buck whenever you're looking at cost cutting.
Yeah, those are great. I kind of have a list of some of our top things we see at our clients, and Tam and Logan both hit on some of those. I guess a couple of other just like more tactical tips that I would give is just, if you're really looking to extend runway, take a look at your payment terms with your vendor contracts. Sometimes you can extend those. Sometimes you can extend those for free just by asking. Other times you might get charged a fee to do that. But honestly, if you're looking at extending runway, it might be in your best interest to pay a fee to, be able to pay quarterly or annually. That might make sense for you at this point in time. Trim the fat. I think I touched on it a little bit in looking at your employee expense reimbursements, but make sure that travel and entertainment, you're really spending money either to retain employees, which is important, or you are spending money to drive revenue. So are you going to the right conferences? Are you really getting leads out of the money that you're spending? So that's really important. I mean, rent is a big thing these days. Like, do you have an office building sitting there that people aren't using? To really reevaluate what your in-person and virtual policy are. And if you've got extra space, deal with that. Either, look at some co-working space or downsize your existing space. And then I touched on this, but, all of this talking about cost cutting, when you do have a strategy together and you know who your key employees are that you want to retain, make sure you're doing things to retain them. You can't cut so many costs that you have turnover, because that costs money too, to train people and to hire people. There's a lot of costs associated with that. So when you get your list of key employees, make sure you're doing things like 401k plans and benefits and holidays and things like that to retain employees and really make your company a best place to work. That's a big deal for companies today. So yeah, I think those are just some tactical things, but I think important as well.
Well, I think this is all some really great advice, and I think we could all sum this up into one general statement, which is don't do nothing. I think every business today should absolutely do something and should look into their company and what's going on and how they can become leaner and more efficient. And so thank you all for taking the time today. Thank you all for dealing with the fact that it sounds like I'm in New York City, but it's actually Indianapolis. I really appreciate the time and the advice, and I hope that we can help people and continue to work together. So thank you all.